Well, welcome everybody. I'm so excited about this topic. This has been on my mind forever, so I'm excited to be able to share this information with our community. Thank you all for joining us. We're going to be talking to our friends at Alto about how to invest from your retirement accounts. So first, I'll just introduce myself and Cherub. My name is Heidi. I am a 2-decade bootstrapping founder turned angel investor, which I know is a little oxymoronic. My largest company is 17 years old, and I grew that from $0 at my kitchen table to a multi-million-dollar Inc. 5000 fastest growing company with 65 employees. I've since built several other companies with other founders and co-founders, and I've had 2.5 modest exits. This is where the angel investing comes in. So I am now an angel investor, proud small check investor in 17 companies. And so this topic, as I've said, is very much of interest to me. So a little bit about Cherub. Cherub is building an all-encompassing OS for active angel investors and fundraising founders. So our platform currently matches fundraising founders with angel investors according to their investment thesis, their industry interest, and their check size. But a whole suite of tools for both sides of the table are coming soon. So investors can join Cherub at zero cost to get deal flow in their inbox from pre-seed to Series A on a weekly basis. We are industry agnostic. We have tech, AI, CPG, media, wellness, food and bev, etc. So if you're interested in taking a look at the companies that are fundraising at an early stage, feel free to join Cherub. It literally takes probably about 5 minutes. You just need a verified ID and make sure that you're accredited on the site so you can learn more at investwithcherub.com. So thank you all for joining, and we are talking to our friends at Alto today, and I'm going to let Kacie do the much better job of explaining everything that Alto does. So Kacie, welcome. Thank you
Awesome.
for being here.
Yeah, thank you, Heidi and the Cherub team, for inviting Alto to participate in this webinar. I'm excited to be here and share more about how to use your retirement savings to invest in private assets. Kacie Connors, I'm Director of Partner Success at Alto. I've been here for 5 years. I manage strategic relationships with angel communities, fund managers, investment platforms. I'm passionate about raising awareness around the ability to use your IRA to invest in alternatives because had I known it was possible, I would have started investing through it a lot sooner. So prior to Alto, I was doing financial planning at Morgan Stanley Wealth Management, and then I subsequently ran an all women's accelerator program where we educated female founders on how to raise capital, which was inclusive of raising from angels. So, over the next 10 minutes, I'll share more about Alto, insights from our research, why retirement capital works for angel investing. Like Heidi mentioned, no question is a dumb question. If you feel you have any, feel free to post them in the chat or we'll address them either live, in real time, or at the end.
Yes.
So, I am required to read this disclosure before we get started. So, the views and opinions expressed in this presentation are those of the speaker and their personal capacity and do not reflect the views of Alto or its affiliates. Nothing discussed should be construed as investment, tax, or legal advice. Any discussion of specific investments or strategies is for informational purposes only. Individuals should consult their own financial, tax, and legal professionals before making any investment decisions. So,
Thank
with
you.
that behind us.
I
um,
also wanted to, before we get in there, since we got the disclosures done, just in the chat, if you can raise your hand, put an emoji, your favorite emoji of choice. If you've heard the Peter Thiel story, the famous, infamous Peter Thiel story, where he invested $1,700 into PayPal, which I think he was an early partner on. And today, in addition to some other investments that he's made through his IRA, including Facebook, like an early investor in Facebook, he invested 500,000, which isn't the more, I think, famous story, but his Roth IRA is now worth $5 billion, dollars, and at least $1 billion dollars of that is not going to be taxed when he decides to pull on that. So that if you've heard that story, I would just love to, get an emoji in there. If you haven't, now you know. So I wanted to be careful to do that after the disclosures because this is a really unique opportunity for people that have a 401k that they want to roll over into traditional IRA or just an IRA in general that they want to start investing from because there are unique tax benefits for high net worth individuals and just people who have this money laying there. So that's a real life example of how this can work for you. And again, why we're so excited to speak on the topic. So I will let Kacie take it away because Alto is one of the few solutions out there that can do this for you. And I would argue they probably do it the best. So Kacie, go for
Thank-
it.
Thanks, Heidi. And certainly the Peter Thiel story is one that we use in our own promotional efforts to make, what is a self-directed IRA and why using it makes sense to invest in alts. So I guess with all of this, let's dive into who Alto is. So, Alto is a self directed IRA custodian that enables investors to seamlessly invest in whatever private asset the IRS deems eligible to hold within an IRA. So, effectively giving investors full autonomy to invest in what they care about. We exist because traditional custodians like Charles Schwab, Fidelity, right? They only allow investors to use their IRA to invest in a limited set of private offerings that are pre-approved onto their platform. So if you have a startup that you want to invest in as little as $1,000, you can't necessarily do that through your Schwab IRA. You'd be required to open up a self-directed IRA at a self-directed IRA provider and then transact. So Alto was born out of frustration when our founder and CEO, Eric Satz, tried to invest in a startup using his IRA. He was formerly an investment banker, turned VC, who regularly invested in alternative assets. It wasn't until he saw his IRA statement on his table that he questioned whether he could use it to invest. He proceeded to open up an account with a legacy provider, only for it to take 6 weeks for his investment to be finalized, holding up the close and driving a lot of frustration with all parties involved. The process was highly complex and manual. He figured there's got to be a better mousetrap. This experience led him to start Alto to create an easier, more efficient, and cost effective way to use your IRA to invest in alts. We really sit at the nexus of individual investors, retirement capital, and private markets. Today, we have 30,000 investors investing $2 billion in assets across startups and private companies, venture capital, private equity, private credit, farmland, artwork, crypto, you name it, people have invested in it.
Yeah, my understanding to, go back to what you were just saying about your founder's story is that the paperwork traditionally to invest from your IRA is about this thick. And like you said, it could take 6 weeks or even longer than that for it to close. And if you're investing in an early stage startup, this needs to go. Like you need to take advantage of the opportunity. So I think again, I'm going to let you continue on, but just so everyone understands the pain point, because I had never experienced that, but I've heard it from other people that it is just the biggest headache to do this.
Yeah, and I'll say that, when Alto started, we weren't too big to start with, right? We don't focus on anything other than how do we help you seamlessly transact into private offerings, right? And so we've developed our product to solve for the pain points, and we see ourselves as an educator in IRA investing, both for the issue to issuers and investors alike, right? When you invest into a private asset, you as the underlying individual are not the investor. It is actually your IRA, and Alto, or your self-directed IRA custodian, is the authorized signer for your IRA. And so given this, there are, unique ways that you need to, or specific ways that you need to complete subscription documents or complete onboarding processes on third-party platforms in order to ensure the asset is titled correctly in the name of your IRA, that the right person is signing, that you are providing the correct banking instructions for where investment distribution should go back to avoid any tax penalties that might occur if, say, you get an investment distribution to your Chase personal account versus it coming back to Alto. And so, beyond just the tech and the way we really serve as an educator around IRA investing to ensure all parties are clear as to guidelines and ensure that we're maintaining the tax advantage status of the investing vehicle.
Sure.
Great. So I think in the last few years, we've seen a significant shift in private markets becoming part of the retirement story. So for forever, the 60/40 stock to bond portfolio was the standard allocation that offered investors growth and stability through different market cycles. But with changing economic conditions, allocations need to change with them. Many investors are looking or turning to alternatives to diversify their retirement savings and create greater resilience in their portfolios. IRA is the largest retirement account by dollar amount. So this is really led by job switching, baby boomers retiring, the growth of the gig economy, and certainly increased maximum on cash contributions. Today, there are trillions of dollars sitting in IRAs and employer sponsors accounts. Challenges: most people don't know that they can use their IRA to invest in private markets. We surveyed prospective Alto users, and only one of them, or one of three of investors, know how to use a tax advantage account for investing in private assets.
Yeah, and I've done a lot of research on this, and especially the younger generation is very interested in investing in alts, probably because they've been priced out of real estate and like the traditional ways of deploying capital to, invest for the future. So I think this is actually a really exciting time for companies like Alto and for, alternative investments in the angel space. I can only see it getting bigger and better. So this is super exciting. Okay, keep going. I'm just gonna keep my
Yeah, I mean, just to comment on that, we have seen a number of, the age range across all of our users is so widespread, right? And we see a number of users who are younger. I think you have a lot of younger users who are more into startup investing because they're taking a more activist approach. There's more interest there and to invest in startups. But in my personal case, right, I was 25 when I was helping run this women's accelerator program. I didn't have the discretionary income to invest in these companies, right? But had I known that I could roll over my old 401k from Morgan Stanley that had 20,000 sitting in it to just even invest $1,000 into some of these companies, I would have, especially because at 25, I can't touch my IRA money for another 35 years. And if I lost that $1,000, I wouldn't, in 35 years, I probably wouldn't be
right.
looking for it. So I think I was more risk averse, right? And that's where the available capital was sitting. Just again, just as mentioned earlier, self-directed IRAs really offer flexibility and access to invest in what you care about. Tactically, there are three types of IRAs that you can open on Alto. So you can open a traditional IRA that is funded with pre-tax dollars. You pay income taxes on withdrawals. You can open a Roth IRA. It's funded with after tax dollars, so you pay no taxes on withdrawals. And then you can open a SEP IRA for self-employed individuals to make profit sharing contributions. And you pay income. So similar to a traditional IRA, you pay income taxes on withdrawals.
Okay. And I think this answers Angeline's question, but she said, if a self-directed IRA, what's the difference between a self-directed IRA versus a traditional IRA? Would you basically have both? Could you have both and roll over a partial amount into the self-directed if you wanted to still take advantage of the traditional Roth or traditional IRA asset classes while being able to angel invest from it?
Absolutely. So at Alta, we don't transact in any public assets, but say you have a traditional IRA at Schwab. It's invested in the public markets, right, or target date funds. If you wanted to allocate a portion of that to angel invest with, you could liquidate, $10,000 or $1,000, initiate an IRA, qualified IRA to IRA transfer over to Alto into a traditional IRA at Alto, and then proceed with angel investing from there,
Very cool.
which is a great segue into how do you fund an IRA. So there are three ways that you can do so. One is a cash contribution up to IRS limits. So under 50 years old, the limit as of 2026 is 7,500. Above 50 years old, it's 8,600 because there's catch up contributions. You can do an IRA to IRA transfer. So again, like a traditional at your outside custodian to a traditional at Alto, or a Roth IRA at your outside custodian, or Roth to a Roth at Alto. We do process Roth conversions, right? So if you wanted to do a Roth conversion, you could essentially you'd open up a traditional IRA with us, you'd do a traditional to traditional transfer, and then you'd execute Roth conversion paperwork with us, and we just reallocate the funds to a new Roth IRA. During tax season, we'd issue you a 1099-R as well as a 5498. 5498s are just detail your contributions to IRAs, so that would reflect the contribution to the traditional. 1099-R would reflect the conversion to the Roth, and then you just provide that to your tax professional for filing.
Okay,
And
so
then,
I'm going to interrupt you to back up to some of the basics because
sure.
this was a question that I had for a long time too. What, how do you, so Alejandra is asking, how do you get an IRA? Is it provided by your employer or is it equivalent to a 401k?
That's a great question. So, an IRA is not an employer sponsored plan. Well, there's nuances, but 401ks are typically employer sponsored plans. So, whether you're active with an employer or it's an old 401k with a previous employer, an IRA is, think of it as like a brokerage account or a savings account that you would open up at a custodian. So, alongside your savings account, you can open up an IRA and contribute to it, with cash contributions. Just move up to IRS limits cash from your savings account, like your checking and savings account, to an IRA. Or you can move funds from a 401k to an IRA. Does
Mhm.
that answer your question?
Yeah, and to just to tack on to that from what I know, and then Casey, you correct me if I am telling the wrong, giving the wrong information here. But as Casey was saying, it's like when you have your employer, sometimes your employer is sponsoring this 401k, you can put cash in it, and that is pre-tax, right? Before tax coming out of your paycheck. And then sometimes your employer matches that, and it's kind of like free money. So it's a great account to have, but if you leave that employer, you likely need to roll that into a new 401k at a new job or move it into an IRA. And a lot of people opt to kind of move it into an IRA. They're like, okay, that chapter was over. Let me put that over here and then I'll start my new 401k with my new employer, if that makes sense. I'm not saying that's a strategy, no financial advice. It's just
Mhm.
that's how I've seen it done in the past. I hope that kind of makes sense. So the 401k turns into an IRA if you want it to, and then you can add additional income, money, whatever savings up to, you said 7,500 a year into an IRA, unless you're
Yep.
over the age of 50, you said?
Yep. And if over 50, it's 8,600, and that's just to account for catch up contributions. Yeah, well said. Everything was perfect. And I think the decision to roll into like an old 401k into your new employer's 401k or move it to an IRA is just, I guess, the flexibility that you want to create and what you invest in, right? So 401ks might be limited to what you can invest in, whereas an IRA with a custodian might open up other opportunities, not necessarily private markets unless you open up a self-directed IRA.
Got it. And then Alondra asks, what are the requirements to open up an IRA account? Okay, I think we covered that. Alejandra, let me know if that didn't answer your question. And then Paulette had a question. Do you support solo 401ks or do you need a SEP IRA?
We do not support solo 401ks today.
Okay, got it. And so I have a SEP IRA and a Roth IRA. Would there be any benefit to me combining those?
I am gonna defer that question
As I
to
asked it,
your
I was
tax
like, I should probably
professional.
talk to my CPA about that. Okay, ignore me.
Yes,
Again, I told
yes.
you all I was going to be asking the dumb questions, so you didn't have to.
That
So
is not a
thank
dumb
you.
question. It's just one that I have to
It's
defer
probably
to a tax
hyper
professional.
specific to my,
Yeah,
yeah, financial picture. Okay, got it.
cool. Sweet. Just this is me touching on why IRAs make sense for angel investing. So a lot of these benefits we covered in some of the conversation, but there are several, right? Your IRA just simply allows you another pool of capital to participate in investments you care about. The majority of household assets generally sit in retirement accounts. So unlocking that capital as a funding method just gives you flexibility to participate either as a new investor or as a repeat investor. I say repeat because we have issuers on our platform who raise for multiple offerings, right? Or we have angel communities that sponsor multiple deals. IRA just allows an investor to maybe invest in one deal through their, savings or their checking account. And then the next one, they're using their IRA just to diversify the pool of capital that they can tap into. As discussed, IRAs are the perfect vehicle to invest in alts given the tax advantage nature, and then the account structure aligning well with long investment timelines associated with illiquid assets. So if you're investing in a startup, typical hold periods are anywhere from 5 to 10 years. I think we're seeing them closer to 10 years. And so, because you can't touch your funds or withdraw funds from your IRA until 59 and a half, you're really it's a good pool of capital to set it and forget it. You won't be able to touch it before your startup investment potentially matures anyway.
Right. Can you invest in a fund as an LP using your IRA?
Yes.
I don't know why I couldn't, right? Yeah,
Mhm.
cool.
Yes. And then just honing in on diversification, Alto's seen an increased amount of angels using their IRA to create diversified portfolios and startups. So certainly with the rise of some well-known pre-IPOs like SpaceX, OpenAI, right? We're seeing people allocate a set of funds to their IRA to invest smaller check sizes across known startups. And then this is really just a real life example. So it's consider $1,000 investment that is now worth 10 times what you put in. So with a Roth IRA, right, you're not paying any taxes on withdrawal. So yeah, right. Exit at 10,000, your capital gain is 9,000. With a Roth IRA, you're paying no taxes when money is withdrawn. With traditional IRA, you're paying some taxes, and with a standard brokerage account with no tax advantage nature benefit, you're paying even more taxes. But I think the important thing to consider is just the tax advantages on the compounding growth that is enabled on gains, right? So, with a Roth and take Peter Thiel, right? He has 5 billion in his Roth IRA now, 1 billion of which is realized gains on just his small Facebook investment. He takes that 1 billion and he can reinvest it in however many startups that may even take that money and 10x it, 50x it, right? And he's just never paying capital, never paying taxes on it. So I know this particular example, when you look at it and you say, oh, well, I'm still paying $1,000 on a $9,000 gain. I think as you compound that growth
Mhm.
either into other private investments or you put it back in the public markets, there's just a lot of benefit there.
Yeah, absolutely. The wealthiest person I know told me to open a self-directed IRA. And I asked her for the name a few times because I think she started with the acronym, the SD IRA. I was like, what is that? And so again, I think Alto is just like such a unique part of the ecosystem here that's making this easy because again, the paperwork stack to do something like this is traditionally been not very fun to deal with and very lengthily. So yeah, Kacie, keep going with how this works if someone wants to get into Alto and make this happen today.
Yeah, sure. So simply you can create an go to altoira.com, click get started in the upper right hand corner. You can click sign up for an account. You can create an IRA in less than 5 minutes. We'll just ask for your first name, last name, date of birth, social, and address. We will run a KYC AML check just to make sure you are not on any that you are eligible to open an IRA. From there, you'll be prompted to either fund the account. You can skip that step as you wait for an opportunity or browse our list of opportunities that you might want to transact in. Once you have an opportunity, you can initiate a transfer through the three methods that we talked about. Just on the steps here, right? This is really representative of a deal that may not be available on our platform as part of our marketplace or listed on one of our partner platforms such as AngelList. So say you have a startup in mind, they are not on a third party platform that we have an existing integration with. You would just introduce them to us. We'd get their offering set up on Alto. They'd invite your IRA to participate. We'd have you e-sign a direction of investment. It just acknowledges that Alto is not acting in a fiduciary capacity. You, as the underlying owner, are authorizing Alto to send funds to this startup on your behalf. We would execute subscription documents or purchase documents, and then we'd fund the investment within 1 business day, so long as your Alto IRA was funded to cover. And just, I guess, with integrations that we have in place, right? A lot of startups are, doing investment through AngelList.
Mm.
We are built in as a payment method. So think of us as like Apple Pay, where on AngelList, you can identify that you're investing through an Alto IRA. You click pay with Alto. It brings you over to Alto to just authorize the transaction, and we go ahead and fund it automatically. So, various ways in which you can invest.
Got it. And so, like you said, you're integrated on AngelList. Are there any other third-party kind of well-known investment platforms as far as Angel is concerned that you guys are integrated with outside of AngelList?
Not angels, but we have a variety of other platforms that focus in farmland, art,
Okay.
and they're on our website if you want to browse.
Got it. Okay. And what is the cost? Are you guys doing, or is it essentially a management cost like a financial services management fee? Like,
That's a great question. We charge based on total invested capital across all your Alto accounts. So you can open up as many IRAs as you wish. We don't charge you until you invest. If you invest if your total invested capital is under 30,000, we charge you 37.50 a quarter, which is 150 annualized, or above 30,000, it is $100 a quarter for $400 annualized. So you could essentially do $1,000 checks across 25,000, or sorry, 25
companies?
companies, and you'd get charged 37.50 a quarter. There are individual investment fees. They vary based on, if you're placing the investment through an integration or not. That's just that those costs are associated with basically how much work our back end team has to do to execute the investment for you.
Got it. And so for those people interested in deal flow like SpaceX and maybe on Anthropic and some things I've seen come across my desk, I know a lot of those deals are also for qualified purchasers, which are, a different rung up, but instead of accredited. But do you guys have access to that deal flow and do you share those opportunities to your marketplace?
We do. That's a great question. So, we have a marketplace that is powered by our broker dealer. We do source supply from different issuers that we have relationships with. So, we have listed pre-IPO shares into SpaceX and Anthropic. We'll continue to do those. And we really source we really look towards what is our existing base interested in and what's hot just generally,
Sure.
and ensuring that we have good clean terms to be able to offer to our network. And so certainly there are angel communities that are running their own SPVs
Mhm.
to access these shares that people are investing in across our platform that we're just not directly promoting or we're hosting.
Sure. Okay, cool. So you can come to Cherub for early stage and pre-seed to Series A, and you can go to Alto for the big dogs. You want to get in the pre-IPO land there. That's very cool. Okay. Yeah, that concludes our meeting. And if you happen to be in Austin, I hope that you'll consider joining us. We have an event and an activation called Founder Heaven on March 12th, happening in Austin in conjunction with South by Southwest. We're having a founder and funder mixer. We're having investor panels, test before you invest, CPG showcase, food, cocktails, etc. And you can check out more on our website.
We have one question from Alejandra. She asked if there is a monthly payment option to join for Alto.
Alto, Alto, no monthly option. Yeah, no monthly option. We just charge quarterly. And again, based on total invested capital. So you can open the IRA, you can even fund it. We won't charge you until you transact.
Very cool. Somebody asked, but you still have to be an accredited investor to participate in these deals. There's nothing that the IRA distinction changes. Is that correct?
Correct. So to open up an IRA and to invest in our platform, you're not required to be accredited, right? It is your accreditation requirement is dictated by the asset that you're investing in. So if the issuer of the offering or the offering structure of the deal requires you to be accredited, then you have to be accredited. We don't run accreditation when you create an IRA, right? Because we are essentially, this is us leaning on the self-directed
Sure.
nature of the investing vehicle. And so any accreditation, verification, or attestation happens at the issuer level. If you are investing into an offering on our marketplace, we will do the accreditation check and verification, but not if you're self-directing into a
Sure.
deal that we didn't do diligence.
Got it. Yeah. So, and I'm pretty sure everyone here on this call is familiar, but being accredited, you need to be at a certain income threshold and or have a certain amount of net worth outside of your primary residence in order for you to qualify to invest in early stage companies. And then there's a step above that, which we is called a qualified purchaser, which is like $5 million in assets or something like that outside of your primary residence. So, and a lot of those bigger deals that Kacie's talking about require, as far as like Anthropic and SpaceX, often require a qualified purchaser status.
I just have a quick question.
Sure.
So is this only for private? So like you said, Kacie, you could allocate a specific amount of, let's say, your Roth IRA and send it over. So when you do that onto Alto, is it just private investments then? Or, okay. So like
Yeah.
you wouldn't want to allocate your whole Roth IRA and think that you could be still investing in like index funds through you guys, right?
Correct. Yeah, we
Okay.
don't hold any private assets, at least currently. And so typically people use us as just a transaction platform. So you have an investment in mind that you
Okay.
then transfer that amount of the investment
Money. Okay.
amount, yeah, to Alto, and then we just turn it around to the
Got it.
issuer.
Okay. Okay. And additionally, if you want to do this, if you wanted to invest in a fund as an LP and not as directly in a startup, is it the same process that you outlined where that fund would then have to contact you guys and have then you do whatever transaction with them and then
Yep.
okay, same
Same
thing.
exact
Okay.
process. So if you were interested, you just introduce us via email to the issuer. We can hop on the call, get them to create the offering on our platform. It'd only be visible to investors they invite. They would invite your IRA to participate. You'd take 1 minute to e-sign the direction of investment. They would approve your investment in less than 1 minute, and then we go ahead and execute subscription documents and send them funds. We would just record your fund investment on your IRA, but you'd communicate directly with the issuer for any fund updates.
Got it. Okay. Thank you.
Well, I think we did it, Kacie. We answered all the questions. We gave all the information. So I really appreciate you being here and educating our community on this. I certainly feel enlightened and I'm excited to join Alto personally and learn more about how I can like mesh all my different types of IRAs to get in the game here. So I hope you all enjoyed this and found it helpful. Feel free to drop us a line. You can email me directly, Heidi@investwithcherub. And I would love to chat with you if you want to get on the Cherub platform. Again, it's free and you can view early stage deal flow from pre-seed to Series A. All right. Thanks everybody for joining us.
Thank you. Thank you, Heidi.
Thank you.
Thank you. Bye.